Hi there, Shingirai here again with another update on portfolio performance over the past week. In a markedly risk-off week, portfolio returns range from CBAM 1 V2 returning minus 1.21% down to CBAM 5 V2 returning minus 3.32%. To put this into context, only 3 out of our universe of 60 plus funds delivered positive returns, sub of 1% over the course of the week, and that would see M&G emerging market bonds up 0.85%, Spider US high yield up 0.53%, and Rafa diversified return multi-asset fund being up 0.47% on the week. The major headwinds on the week were inflation related, where we've already seen European inflation coming in at 9.1%, UK inflation at 9.8%, and then US inflation surprising on the upside versus expectations, coming in at 8.3%, and really causing the market to hedge its bets that the Federal Reserve Bank and central banks in the developed world would be tightening rates faster and would be tightening monetary policy faster as well. On the back of this, you would see Hypnosis Songs Fund, which is an interest rate sensitive fund there, with depending on the royalty payment stream, down 8.09%, alongside some weakness we saw there in European markets, down 6.91% through Allianz and 6.76% through Baillie Gifford European. In the broader European market, some smaller equity positions, smaller company positions that we hold there, down 4%. US equity markets down 5% through the S&P 500. And then we also saw some weakness there for Japan and the UK, also down more than minus 3% on the week. Switching over to a quarter-to-date basis, portfolio returns range from CBAM 5, returning 2.25%, down to CBAM 1 V2, returning minus 1.58%. The narrative around clean energy continues to persist, as Europe obviously facing an energy crisis there with soaring gas prices on a year-to-date basis, despite some of the encouraging numbers we've seen in terms of storage capacity levels. We do still continue to see on a quarter-to-date basis rather the narrative around clean energy through iShares Global Clean Energy and PicTech Clean Energy being up more than 19% on the year. Encouraging GDP outlook and improving PMI numbers, really then again being the driver for our equity Indian subcontinent performance, up 17.76% on the quarter. In terms of detractors, our Chinese equity positions marginally worse off, 2% worse off than the numbers we were reporting last week, and that would see Baillie Gifford China down minus 12.32%, all the way across HSBC MSCI China down minus 10.46% on the back of some of the headwinds we continue to see there for the property market in China, and also some concerns from investors around the zero tolerance COVID lockdown policy. But then again, we're hoping to see some resolution, as I've been highlighting, on the October 16th Chinese People's Congress a meeting, which is held every 5 years, and hopefully that gives us some sort of view or some outlook on perhaps a loosening sort of lockdown policy, and that would be generally beneficial for the Chinese markets.